Hello everyone. In this video, we will be examining one of the most crucial elements for successful trading, which is mitigation blocks. Friends, one of the key factors in entering a trade and reaching the target successfully is the mitigation block, also known as the breaker block, formed after a liquidation hunt by market makers at peak or trough levels in the price. Both are essential for entering a successful trade. In this video, we will learn about mitigation blocks and how to enter a trade. Let's get started. Firstly, let's try to understand our example in a simpler way through a line chart, and then work with real price candlesticks on the chart. Dear friends, as you can see on the screen, we have a line chart depicting an initial downward trend, followed by a horizontal movement in the consolidation zone, and then a visual representation of the price starting to rise. At first glance, we see a line that represents a price movement that looks quite simple and roughly like a U shape. After the price drops in the downward direction, the most recent type of level is formed through a liquidation hunt, initiated by the market maker attacking to a lower level again after the formation of the previous bottom level. This hunt aims to clear the stop-loss orders located at the bottom, allowing the market maker to manipulate the trend in the desired direction once these orders are cleared. Now it's time to see how the mitigation block is formed, friends, as we can observe on our chart after the declining levels in the liquidation hunt, a new higher low level is formed following the last bottom level. Now, we can notice that the descending trend is gradually showing a tendency to move upward, indicating the emergence of buyers in the market. To help you better understand how the mitigation block is formed, I have enclosed it within a circle. Please pay attention to how the structure is shaped. I believe you have understood the structure of the mitigation block. After the formation of the block, when the price makes a move upward again and establishes a higher level, as you can see here, a breakthrough structure known as a change of character occurs, clearly indicating a trend reversal. This breakthrough structure can be considered as a signature of trend reversals. Now, professional traders will start evaluating long position opportunities after the upward breakout, abandoning their short positions. I kindly request your close attention to what I am about to explain in the current visual. Before the formation of the change of character structure, when the last bottom level of the mitigation block is established, if there is a bullish engulfing candle formation near this bottom level, as seen in the example, short-term traders, or scalpers, perceive the engulfing candle formation as an opportunity and enter a long position with the formation of the structure. Of course, I would like to emphasize again, this is a long position opportunity that occurs with an action taken before the breakout referred to as the change of character. This type of entry is considered very aggressive. Personally, being a professional trader with years of experience in the markets, I often enter trades in this manner. However, to trade in this way, one needs to have the ability to analyze price action very quickly. Otherwise, your trades are likely to frequently close near the stop-loss level. Now, let's move on to the formation of the change of character structure, friends. As you can see on the screen, if we have a blue-colored, or possibly green in your chart, as color preferences are entirely up to the analyst, bar closing above the recent peak level, we can talk about the formation of the change of character structure. With this breakout, even without confirmation of the trend reversal, a long position can be entered. Since confirmation is not obtained, we can label this trade entry as an aggressive move. In the example wave we have drawn, if a candlestick formation like this occurs above the wave, we can talk about a significant retracement. It will be possible to enter a long position again as the price turns upward. Here, we can now discuss a confirmed entry because the upward breakout of the change of character level, followed by a valid retracement, without reversing the direction of the price downward, filling all gaps upward indicates that confirmations are in place. This creates a favorable environment for cautious traders to open positions. And of course, the issue of where to place the stop-loss order, which even professional traders sometimes find challenging to decide. Friends, based on the entry levels we have seen in the trade, placing stop-loss levels as shown on the screen will be the most logical areas. Certainly, there is always risk in every trade, and it is impossible to guarantee that no trade will touch the stop-loss levels or close automatically. Nevertheless, it is essential to remember that stop-loss orders are the most crucial insurance that protects. Now, after practicing on the line chart, let's analyze the mitigation block formation and determine the most effective entry point on a real chart. Friends, as you can see on the screen, following a declining trend, a bottom level is initially formed. After the price makes an upward move, the wick is dropped one step below the formed bottom level, clearing the stop-loss orders of market participants. This is where the liquidation sweep occurs, as we initially observed. Now that the stop-loss orders at the bottom have been cleared, the market maker has created a more comfortable space for itself to maneuver. After advancing the price a bit, we can observe the downward movement turning upward again as buyers come into play, rising above the liquidation cleanup line. Later, we see it forming another higher bottom level and rising a bit more. I kindly request your close attention to the structure enclosed within the circle. Here, a clear mitigation block is forming, serving as a tangible indicator of the buyer's efforts to turn the trend upward. I have drawn a resistance line from the peak level right in the middle of the mitigation block structure. We can refer to this line as the neckline. While the term neckline is typically used for head and shoulders or inverse head and shoulders formations, I don't see it as incorrect to use it for this resistance line as well. Waiting for the upward breakout of this line will signify the exact placement of the mitigation block and create an opportunity for entering a trade. I would like to emphasize that the path we are currently following is essentially tracking the path opened by the market maker. In short, we are following the footsteps of the market maker. Now, we observe that the drawn resistance line has been crossed with a strong upward candlestick. With this breakout move, the mitigation block is considered completed. Traders who prefer to enter the trade by waiting for a strong retracement need to patiently wait for some more time. Aggressive traders, on the other hand, can enter the trade from the closing level of the voluminous and large-bodied bullish candlestick at this point. As you can see on the screen, traders aiming for partial profit taking can gradually take profits at the levels I have marked. These levels are based on the retracement and impulse waves formed by the price in the past. The price action reached our initially set target profit point. Subsequently, it retraced to the neckline of the mitigation block, which we referred to as the neckline. It even underwent a deep retracement, descending back towards the region formed by the mitigation block. Let's observe the development of the price movement if we keep our trade open while maintaining our second and third target levels. As we progress with the price movement, we can see that we have reached the second target price level. At this point, some traders may choose to take more profit, and others may consider following the third target region. Traders who believe this level is sufficient can completely close their positions with a significant profit. Closing the trade at this level or continuing with partial profit taking is entirely related to the trader's own risk-reward ratio planning. It would not be correct to rigidly bind this to any specific rule. At our third and final target level, we had identified an area near the peak level of the last declining trend. We can see that the price has rapidly reached this target level. Dear friends, I believe you have gained very important insights from this video. Please, I recommend watching this video not just once but multiple times as it is crucial for your practice and experience. If you want to grow your capital, make sure to memorize these videos by watching them repeatedly. I would greatly appreciate it if you subscribe to the channel and hit the like button. Thank you, and I hope to see you again. Goodbye.